Majority of commercial real estate investors get scammed every single day by either seller brokers or by investors by not understanding occupancy to its fullest capacity. And most people overpay so much or buy the wrong deals or waste so much time. I'm gonna break down for this video for you how to know if a deal is truly good on a first case basis. I just broke down a deal with my clients that looked amazing on paper until we went deeper and found out that we're actually being lied to, which is a super common trick in commercial real estate, especially when it comes to storage units, multifamily, and more. My team's done $1.6 billion in transactions over the past few years, and I've seen all the tricks under the sun, and this one is a massive one. So stay tuned. And I want to tell you as well at the end of this video how to get past this and not just take face value information and claims to make a truly informed decision in your next investment. And of course, you need help down below. Link in the description. Have a call from my team directly. No obligation to help you the best deal. I've negotiated over $1 million before off of one single asset for a client in the past, and we do this time and time again. So occupancy, there are two main kinds of occupancy when it comes to commercial and all kinds of real estate. Obviously, we have number one, which is physical occupancy. So it's going to be that there are, let's say, 100 units inside of this property. So we have 100 units, and 95 of them are occupied, meaning we have a 95% occupancy rate. And most investors who are selling their assets and brokers even will tell you we have an amazing occupancy rate. It's 95%. It is amazing, high demand with almost no room for growth unless you increase rents. This tells people that it's going to be a great cash flowing asset on paper. But here's the thing that a lot of times when you're doing this, it may be 95% occupancy rate physical, but the econ, which is number two, which is almost more important. Actually, I will say is more important than anything, is a econ occupancy. Econ is economic occupancy. So you have physical and you have economic. These are two main ways to understand if this property is in high demand. And I'm going to show you in real numbers. I'm looking down so much. Real numbers that we have for all current assets we have that we're working on. That we're probably going to save my client $500,000 or more on this asset because we can see the full picture that most even savvy investors miss because it's so easy to hide all these things. The way this really works is if you have actual income from a property and you divide that by potential income, that tells you what our rate is. So we look down on the thing. So actual rate. And then you're going to make sure when you're doing this, you have a full understanding on actually going through, hopefully, the T12s and rent rolls and all those things. This is going to be potential. I want to use pro forma, but at least potential income versus actual rent being collected today. And when you do this, it's going to show you a clear picture. So let's break down my math that we have on our deal. To make it super easy for you to see exactly how this is easy to hide. So we have an asset that is listed for $1.65 million. Our rate is $7,720 per month. This is going to be our scheduled rent. So it's going to equal a nice, great asset. $212,000 and $640 a year. So we know our gross income here is going to be this. But when we look at the numbers, this is what we're looking for. That's what they're kind of promising us in terms of what they're making. They're saying it's a high cap rate. They're saying it's always occupancy rate. But they don't tell us the economic side of things. Economic side of things, I can see, so econ is actually $135,000. So if I was to divide these two numbers, this gives us 63% of an occupancy rate for economic. And this tells me that 1 out of every 3 people in this place out of 196 units are not paying. Let's let it sink in. On paper, it looks amazing. I'm going to see a deal that's giving us $212,000 of income. But then I see our breakdown is actually 135. And this greatly affects your NOI. If my NOI prior to this, was $100,000, but I just lost $70,000 here, that means that my NOI now went from a 9 cap to a 2 cap or 3 cap. And you only see actually happening before your eyes. So whenever you buy an asset, you want to do is one, obviously, know the financials, see everything going on. And then when you look at the financials, like actually make sure you go line by line. What I like to do is get Excel into a spreadsheet that we make ourselves that shows me all of the rates, who's paying, who's not paying, is bad management, how long been going on for, are they doing any, kickouts to people and so forth. Because I want to know, one, my T12, super important. Having that T12 gives you a full breakdown of what's going on. You want to know your bank statements that they have. You also make sure when you're going through this thing, if you definitely can, get tax returns for the last 3 years. Last 2 years minimum. 1 year if you really have to, it's like a brand new ownership. That works too. A lot of times they may also have the past tax returns and give to you when they bought it, when they transferred over them. And of course, the big one is all the delinquency reports. You want to make sure we have all the reports for delinquencies. And here's the thing. Even with all this, well, obviously, tax return is the big number for us, but that is all real basis. Because T12s can kind of be lied and fudged on, and then bank statements is pretty accurate. This is accurate as well. I want to see like the lease invoices and lease agreements as well for each person, storage unit or complex, whatever the case might be. I want to see all these things. Right now, we have a deal that we're going to come to market pretty soon, at least off market, on market. Stay tuned for that one. It's about $9 million. Apartment complex here in Austin, Texas. And we'll have them collect all these different information to make sure we present it to the buyers or you are watching this, what it actually looks like. So it's so important to get all the information. Because again, it is so easy to hide facts within small details. So hopefully it's helpful for you all. If you have any questions down below, link in the description, call me directly. Happy to walk you through the whole process of buying and selling commercial real estate, the highest level, the best returns as well. And of course, also just make sure when you're going, you have an agent, hopefully me, that understands this too. Again, I can see so many deals that look amazing on paper. And you talk to the agent and they say really great things. They show you some financials with some information and documents, but a lot of times it is totally inaccurate. It's hiding numbers for you. And over here, a whole video that breaks down all things underwriting transactions. Obviously, this kind of breaks down a little bit of it, but I have a whole breakdown of underwriting deals, what to ask for, to look for, and more. And down below that one is a whole playlist for all things commercial real estate investing, topics the answer you need to the best returns in your next asset that you invest in or sell. Thanks for watching, and the best thing is subscribe down below, tag your friends, share this video, helps me a lot. I'll see you at the top, and the best day yet.